Welcome to Yellow Tunnel. My name is Vlad. I'm CEO and founder of Yellow Tunnel, and today I'd like to go over our weekly strategy roundtable where we talk about current market conditions, effect of tariffs, effect of big beautiful bill that's supposed to pass the Senate, additional tariffs on European Union, escalation, de-escalation of tariffs, interest rates, NVIDIA earnings. I think the big event this week is going to be outside of tariffs is NVIDIA earnings and bonds, right? Keeping an eye on auctions, treasury auctions, which did not go well last week. So something to be, something to keep in mind. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Dennis is back, Jeff is back, Peter, Hyun. Some of you are, been with us for years. Some of you just joined. I think the biggest difference between Yellow Tunnel and maybe some of the other subscription is that my background is technology. I'm not a market maker. I spent most of my career in fintech space working for either hedge funds or broker dealers to build technology. And when the company went public, like Options Express or Groupon, I decided to manage my own money and taking everything that I've learned in building technology and tools kind of to help me trade and find signals. I really like artificial intelligence. I did AI for my master's, 25 years ago. So that's always been a field that I kind of gravitated to. And in the past couple of years, we have Keith, who is also doing our live trading room together. We're doing live trading room, and he's a market maker. His background is market maker, working in hedge funds. He has background in mathematics. He understands Schultz model and how to price options really well. So I think that's the unique proposition, that we have both technology side and trading side working together. So I encourage you to set up a meeting with especially Keith. He likes to talk to people. He does the one-on-one training, he does the coaching, and he does our live trading room. So that's what we bring to the table. And this is kind of, I've been doing this for 25 years now. I need to update the slide, and Keith did it, I think, been doing it for 20 years. So close to 40, 50 years of combined trading experience. Disclosures are very important. I'm going to go through the latest trade examples. So it's very important to understand latest trades. And risk associated with trading. If this is your first broadcast, especially if this is your first broadcast or you haven't seen this slide before, I encourage you to pause the screen, visit optionsclearing.com, this link, to understand the risk and suitability associated with trading stock or options. Right? I'm not an advisor. I'm here to show you what I do in my own account based on my own risk tolerance level for general education purposes only. All right, before we jump into trading psychology, let's talk about current market conditions. Please type in your questions. Tim already gave a few questions. Third time for you, I have the hard time to save money to actually join. No problem, Dennis. I mean, this is the purpose. I believe in free education. I mean, obviously we want you to be a paid subscribers, but you can get a lot of good content on Yellow Tunnel for free, right? And everybody likes free stuff. So I like free stuff. So hopefully just joining, every Tuesday would be great if you can do that. So what happened, right? We had a big pullback last week, not big pullback. I mean, relatively, I think currently most of the pullbacks are met with bullish momentum, right? The treasury auction did not go well, right? Everybody's concerned about trading away from United States, exceptionalism, that the new administration, right, creates uncertainty for the investors. Nobody likes uncertainty. So you can see that, countries like Germany, right, making new highs, Japan makes new highs, Mexico across the border making new highs, right, continue to trade, outperforming the US market, right? And it doesn't matter what your opinion on politics, you usually want to look at where the money is going, right? The money will go into the place that's the most optimal to invest. And if it happens to be Mexico or Japan, at least for now, that's where people are investing. Spiders also rebounded, right? Because last week Trump said, well, June 1st, we're going to celebrate with the 50% tariffs on European Union, because they're not negotiating in good faith or not making enough progress for the new administration, and it seems like it worked, right? The European Union came out and said we're going to get our act together, and we'll come up with something beautiful soon. So market likes this. Spiders are back to 590. SPX, if you look at the SPX, we're above 5,800. So 5,800 in terms of positioning, right? It doesn't matter what you think or what I think. It doesn't matter, you know, what your views on politics are. You trade, you want to see what other people think, right? Going back to game theory. Game theory is, you know, you look at the market participants and you're trying to determine what majority of the people are thinking, right? And more than 50% of the people today think are bullish, and the 200-day moving average held. We had 5,800 was a strong support from December, January, February of this year. It held, right? And now we have a bounce back. We're not that far from all-time high, which is 6,000, right? Which is 6,000. And on the news of de-escalation on tariffs, 10-year yield sharp pullback from 4.6 to 4.3. Actually, you know, kind of undid all the uncertainty about the auction, 20-year auction and treasury auction, and the additional tariffs on the European Union. And now we're basically no new signal, we're flat. And we talked about 4.3, kind of this magic line where, you know, above this line, interest rates are elevated and people are start worried as we're approaching 4.8, and below that, you know, line, then recession, right? People are more afraid of recession, right? So this is more of an inflationary territory, and this is more of a recessionary territory. Not recession, but, you know, I'm talking about concerns. As long as we are close to 4.3, this is positive, right? I think the only concern I have, not the only concern, but major concern for a lot of market participants is bond market, right? It's great that, you know, nuclear energy is going up. It's great that Tesla is breaking out, but they're not going to move the market. The interest rates and the treasury and liquidity in the repo market, this is what's going to affect the market, especially as we approach summer, right? This press release, we're approaching the summer, you know, volume dries out, liquidity dries out, and, you know, you can have these negative shocks. But so far so good. 10-year looks healthy. 10-year dollar is back higher, close to 100 level. We had a pullback, but now it looks like it rallies. High yield is up. VIX is back to 19, right? We printed 25 last week. We're back to 19. That's positive. QQQ is basically already retesting recent highs. The next level would be all-time high, which is 540, right? So we're already facing a lot of overhead resistance on QQQ. Semiconductors, similar price action. Small caps, so you have widening of participation. It held the 200 level, which is a 50-day moving average major support, facing 200-day moving average. And you can see ARK Innovation is up. Gold, right? Tim asked about gold. Gold, I think, is a good hedge, right? There's not many asset classes that rally when the market sells off, right? And at least the short-term correlation for the past few months was the tariffs since the Liberation Day, or I would say since March. The trade has been either the yield goes up, right? 10-year goes up, and then gold goes up, right? And then everything else sells off, right? Almost everything else sells off. So you can't really find a lot of hedges except gold. So I think gold has more room to go higher. I think uncertainty persists, right? Probably going to be, even though there's a 90-day delay in the tariffs with China, potentially we might not reach an agreement, or at least by the deadline, and then I think gold will be a good way to hedge. Tim also asked about SMR, nuclear power energy, right? That's been a tariff, not tariff, but one of the, I don't know if it's a separate bill or it's part of this big, beautiful bill that needs to get approved by the Senate, but, you know, investing into nuclear energy, right? Because you need to support AI. AI is here, it's growing, it consumes a lot of energy. So, you know, red wave in politics usually mean you remove the subsidies from green energy, right? From electrical vehicles, from wind energy, and you push it to oil and you push it to nuclear energy. And nuclear energy is doing SMR, breaking out. I like that chart. CCJ, more common chart that people pay attention, did not break out. So I like SMR better than CCJ, right? Because there is already a breakout. Breakout, pretty liquid. White House executives. Oh, this is executive orders, right? The executive orders. Okay, so I think this is passed already. Maybe we don't need the House to approve. So this looks clean and broke out. And the final question Tim had was oil, right? What about ConocoPhillips or XLE? I mean, it does look bearish, but it's not making new lows for the 3 days, right? So I would be careful, right? Any positive news and yeah. I mean, if the deal was, I don't know where we are with Iran, if that deal breaks down, then the energy could, go higher, right? But we're not making new lows on XLE. We did pull back. So it's hard to say, right? I mean, I usually like I think in this market, you want a momentum stocks that are like Tesla, SMR. Those are good looking chart. General Electric, right? These are the type of stocks you want to own, right? Because they're breaking out, right? GE, JP Morgan, right? So if the stocks are breaking out, or CrowdStrike was one of the trade ideas, cybersecurity. So that's where I want to invest, because this is a stock picker's market, and I think it's a trader's market, right? This is not buy and hold investors market. I think active management will outperform passive management this year and probably next year, right? In the past 2 years, passive, if you just buy and hold and don't worry about it, the last 2 years market was up 20-25% every year. So passive investment made sense. Right now, it's more active traders market, right? You have to invest in CrowdStrike, you have to invest in Tesla, because those are the stocks that are breaking out, right? So Tim, hopefully I answered your question. Dennis. Where BW not seen, heard of all where all the signing were. I mean, my opinion is doesn't matter what if I heard or have not heard. I usually like liquidity, right? Aerospace and defense is a good stock. I mean, I like General Electric. That's the stock that I've been trading. Very liquid. Everybody knows breaking out. So BWXT, I don't know, but GE I do. So I think out of aerospace and defense, probably G is the most liquid. I haven't heard of BW. Is it liquid? Let's see. I mean, it's over 1 million, but still not a lot. Average 30-day average volume under 1 million. Since I'm an option trader, I want liquidity, so I usually gravitate to stocks that are more liquid and comparable. And GE chart looks better to me, right? SMR, the reason I like these charts is because there's a clearly defined exit point, right? If this thing drops below 30, right? I mean, it's pretty volatile, but if it drops below this neckline, I would exit out. On the upside, the sky is the limit, right? I don't know where the limit is, especially as a retail investor come in and start buying calls, right? Bid up this, so the rally could continue. Let's see this, yeah. So since 2021, 4 years, so it's not a. Obviously, the multiple is probably getting. I mean, the company's not making any money, right? They're losing money. It's $9 billion company. So it's a momentum stock, right? So as long as you have a momentum, you continue to trade it. Right, because the only thing is, if I don't know who, I don't know if who has oversight over these executive orders, right? I mean, I think federal government, not federal, what is it? Supreme Court, right? If Supreme Court passes the, new administration is acting illegally and reverse or pauses this bill, executive order, right, then it will sell off. But otherwise, you know, it could continue going higher. I mean, CCJ is kind of similar price pattern. OPEC meeting. Thank you, Kevin. Thank you. Major oil companies hurting. I mean, the economy, I mean, the idea that global economy is cooling, right? And that, you know, more drilling, you know, I mean, I agree. The difficult part is you have calendars diagonal, right? That's going to expire in next week. It's hard to predict what's going to happen next week, right? I mean, I usually look at, right. So you can still see it's a downtrend, short-term downtrend, but, you know, you can look at our friends at, let me see. Let's see, what is the bar chart says? XLE, or COP, still ConocoPhillips. So volatility is subsiding and trend, I mean, it's bearish. It's still short-term, medium-term, long-term. If you're doing bar chart, let's see, if you go to TradeSpoon. See, TradeSpoon actually, so traditional technical indicators showing that short-term, medium-term, long-term is bearish, but TradeSpoon, they actually turn in positive on ConocoPhillips. Kind of mixed bag, right? 86, 82. So it basically says it trades in the range. It could get as high as 90 and as low as 80. 80 to 90 range on ConocoPhillips. I mean, it makes sense, right? Any negative news and it's back to 80, but anything positive and it's gonna be, you know, 90, 92 and a half. So for 3 days, it's not making news, but it could be a pause, right? So it's hard to determine. I think it's going to be driven by news, right? I don't know what the next news in energy sector, but I mean, OPEC meeting. I don't know when is the next open. Do you know when is the next OPEC meeting? I mean, Iran, Tuesday, December. Okay, so next meeting is June 1, 2025. Okay. So I guess if they continue to increase the supply, which it's been, then this ConocoPhillips should drop. But if they decrease the supply, then it'll go up. Data show for LLM in terms of support and resistance. Jeff had a question about NVIDIA. So let's talk about NVIDIA. Well, first, okay. First, let's go through this exercise. We usually do it. Let's not forget to do this again. So looking at the position data. So first, let's look at yellow tunnel, right? So our model basically for spiders, right? This is earnings power traders. You know, we have NVIDIA and TAP, Marvell, and HPQ, CRM, a lot of earnings this week, Zscaler. NVIDIA model sees 130 in 10 days. We're already at 134, but short term it's in downtrend, still in downtrend. Let's see. What does the NVIDIA traditional technical indicators show? Volatility is subsiding. It's turning positive. So short term, medium term, and long term, NVIDIA is turning actually positive. So there's disconnect between TradeSpoon yellow tunnel model and bar chart traditional technical indicators. But in terms of exposure for NVIDIA, you can see in terms of position in 150. So one standard deviation on earnings tomorrow, which is tomorrow after the close, it could be at all-time high, which is 150, 155, and the largest position right now, 150. I mean, if it's really good and breaks all-time high, you get to 160. On the downside, 120. So 120, 155. And you can see it, actually, I did this trade today. So I sold got like that. So I sold 120, 117 put spread, right? I received 23 cents to finance the call spread, calendar call spread, right? That expires, buying June 6th and selling May 30th. Because I think if it has a positive event, then it could get to somewhere between 150 and 155. Well, 150 seems like the largest, but it has to have positive earnings. On the downside, largest support is at 120. So I think NVIDIA could hold 120. So if it's bad earnings, 120, right, somewhere between 50-day moving average and 200-day moving average. Based on open interest, it's 120. And then on the upside, it's all-time high, which is 150, 155 in terms of positioning. So that's NVIDIA. And then let's look at SPX. So let's go through that exercise on SPX. Okay, so first of all, most of the gamma, see, nobody's buying July contracts, right? So people are not worried about July. And June still has a lot of positioning from April and May and March. April and March, when market was down, a lot of people put a lot of positions in June 20. So you can see for the next couple of weeks until the third Friday of June, market is going to have a hard time breaking through this overhead resistance. In terms of major overhead resistance, what's called a call wall, right? This is a call, right? Wall of calls. All it means is that there's literally billions of dollars between the futures market, SPX market, equity market, people targeting 6,000 level. Some selling calls, some buying puts, but you have a lot of positioning here. That means that this is a major resistance, right? And at this point, it's the major resistance number one, because since live trading, we already passed the 5,900, right? And on the downside, this is in much smaller positioning, but we've seen 5,800, a little bit bigger 5,700, but these are your support levels, right? Support number one, support number two. So if you look at July and June expiration, one standard deviation, right? These are the basically supply and demand for options, saying that most of the time, as a trader, the bell-shaped distribution curve, we're trading somewhere between 5,700 and, in this case, 6,100. All right, so scenario number one, some positive catalyst that makes more than one sigma move, right? This is one sigma move, right, to the upside or to the downside. But you can have scenario number one where it's one standard deviation to the downside, or you can have really bad news, like maybe a couple more, treasury auctions that don't go well, yield starts approaching 5%, and then you could have a two standard deviation move to the left, to the downside, and we break the 5,700, maybe 5,500, maybe revisit lows, 5,200, but something major happens between now and next earnings season, right? Because these are June and July options, and majority is June. July is not even in there. And scenario number two, we're trading in a range, right? We get to 6,000 again, then gets rejected like last week, right? We get to 5,800, right? Maybe something like this, right? So that's scenario number two. So how many of you say scenario number one, Vlad, making new highs or revisiting new highs at least 6,200, maybe 6,300? We're not going to have sell in May and go away, right? We're going to have a repetition of, let's say, 2018. If you look at the 2018 chart, right, then we actually made new highs in June, July of 2018, despite the tariffs, right? So scenario number one, we're going to repeat of 2018, right? This is the first administration when we were at war, tariffs war between European Union and China and the United States. Scenario number two, no, we're not going to make new highs. There's still a lot of uncertainty. Scenario number two, we're trading in the range. And scenario number three, we're going to have some signs of recession. Maybe unemployment rate goes up in June significantly. Maybe inflation data goes up. Maybe auctions, treasury auctions continue to deteriorate, demanding higher yield. And we have scenario number three. All right. Dennis, Jeff, Kevin, Manfred, welcome. Peter, Arno, we have multiple Peters today. Tim, how many of you say one standard deviation? We're going to revisit all-time highs. NVIDIA is going to, hit it out of the ballpark tomorrow. We're going to reach an agreement with China and European Union, and we have scenario number one. Scenario number two, no, we're going to have these yin-yang, 2 steps forward, 2 steps backward on tariffs and, market uncertainty. And scenario number three, signs of recession or hyperinflation, right? Either hyperinflation, inflation comes back, or recession. Signs of recession. Because there's divergence, right? There's still a divergence between soft economic data, some of the surveys that point, deterioration in consumer confidence and, corporate confidence in terms of investing versus hard data, right? Unemployment data, right? Manufacturing data. So there's at some point, if they converge, then that could trigger, pullback. Questions? Tim, 2, Jeff, 3. Anyone else? Kevin, Kevin, I know what you're gonna say. But you can say it. Manfred, Peter, anybody? Peter, 2. I'm gonna go with 2, right? I mean, we could have 2018, right? So I'm gonna go with 2, right? If I go back to spiders, do the weekly chart and just travel back in history. Same thing, right? Tariffs on China, 10% pullback, we revisited, reached the lows around April. May was one of the better months. June, we had a small pullback, still made new highs, and then once the 90-day deadline passed and China did not comply, escalation of the tariffs, and we had a 10% pullback, revisit the lows, and then Powell decided to raise rates, and then another 10% pullback. So, I don't know exactly, the magnitudes are different, right? We had 20% pullback, not 10% pullback. And I mean, June June is actually same levels since 2018. So we could have a strong June, July, right? Past couple of years, actually, June, July has been strong months. 24. 24, June, July has been strong here. 23, I think, yeah, June, July were strong months. So past few years since the last recession, June, July has been actually, even in 22, I think it did rebound. Yeah, we had June, July were better. So for the past few years, we don't have sell in May and go away. We have like sell in July, end of July and go away, right? Or get ready for September, October, because from seasonality point of view, usually spiders are, so actually June, July has been strong, but then, July we have a pullback and then towards the August pullback. So that's more of a seasonality. Any questions on SPX and where to expect the market? All right, so we covered NVIDIA. Jeff, let me know if you have any questions on NVIDIA. LLY, it's been trading LLY. This is the weight loss. I mean, they have to get strong earnings. They do have to have a strong earnings. And you can see a lot of people buying 850 strike, 950 strike. So a lot of people are bullish on LLY, but for now it's one standard deviation 800, on the downside 660, right, for Eli Lilly. I mean, the good news, it is kind of did not break, not making new lows, right? So the 700 level has been a strong support. But it is descending, right, neckline. So I guess next earnings in August, right? Next earnings is in in August. But with weight loss, there's a lot of competition. Trump is making priority to target some of these biotech companies to make sure they lower their prices and generic products are available. So the chart looks bearish, right? There's no other way of describing this. It does look bearish. But if you already long Eli Lilly, I would not exit at these levels, right? I would wait for a rebound. All right, any other questions? So we cover Eli Lilly, we cover NVIDIA. In terms of our services, again, Dana said, what are the services for free? So education, right? If you add info@yellowtunnel.com, info@yellowtunnel.com, you could participate in these webinars, right? You get on Tuesday live, we send the recording. Then on every Sunday, you also get a blog, right? That I talk about, GE, buy GE, or I talk about my own personal life. So that comes out every Wednesday, every Sunday, and then Tuesday, Wednesday, we have the webinar and the recording, which is free. A lot of content, right? You can find different webinars, different topics like bullish call spreads, inflation, recessionary trades. This is back from 23. Some of the psychology topics you can find here and also under market plan. So the key metrics for probability of success, estimated move, you can find them all under market plan. So that's free content. You also can look at the recordings, right? I encourage you to look at the recordings. And we do have this active investor workshop. You can basically type in any data option. If you want to learn about options, you learn about stocks. We have these webinars from TradeSpoon, Yellow Tunnel that we've been doing for the past 12 years, 2012, 14 years worth of webinars. So something to look for. They are older, but it's evergreen webinars. The concepts don't change. In terms of paid subscription, we have aggressive power trader. So in the live trading room, which Keith and I are managing, most of the time I use these signals. Not always. Like I like Mosaic was a signal. Mosaic looks in strong uptrend. Agriculture, some of the agricultural chemicals are in strong uptrend. Right? You can see kind of strong rebound. CrowdStrike. So these are the signals. Sometimes if I trade them, then you would see them under orders. Like CrowdStrike, I actually did today. I didn't. So I actually, if I traded, then you would see it. In the morning, I bought it at 467. It's trading at 472, so it's getting close to exit half of the price. But you would see these orders in positions. If I don't trade them, then you have to make a decision on your own, right? So if let's say Mosaic at 34.76, maybe it's a buy. At 35.19, then it's a little bit overdone, right? We have over 2% rally today. The data gets posted the night before, so this was posted, Monday night. It shows you long-term and short-term predictions, and it also gives you this buy and sell zone. And you notice, like even spiders, they're pretty wide, right? 1.5%, 2% wide. So you want to optimize your entry, right? Model sees 580 to be support going into. This was as of Friday data, assuming if we had escalation in the tariffs, we probably would get to 570. That's what the model saw. But because of the de-escalation, now this is a support, right? If market revisits 580, I would consider buying again, right? Buying again. In 10 days, it sees 585. We're already at 590, so market is definitely ahead of itself. And getting to, I mean, 600, I think, is overbought level. You can also type in any symbols, right? If you're looking for Microsoft and you want to, or Nvidia, and you want to see, what the model thinks, then you can type in your symbol. Same thing, they'll say Microsoft 446, 453. Next 10 days could get to 450. We're already ahead of itself, right? There's a $8 move today, and long term, it's still kind of in downward momentum. So that's aggressive power trader. Weekly power trader, same thing. It's just a longer term model. The idea is to hold the position for a couple of weeks, maybe a month. But you have, Barclays, BSX, Honeywell, JP Morgan, Mosaic, some of the other signals for longer term models. Dynamic power trade is actually my portfolio. So I use these signals in aggressive power trade and weekly power trade and actually trade them, live trading them. So today, you can see it's a combination of both stock and option. Right, I'm trying to exit Oracle spread, getting close at 430. I trimmed my IBM position, which was a signal from last week. Abbott was a signal from last week. I trimmed Abbott, and I entered CrowdStrike. So it's a combination of stock and option trades. Some of them are shorter term, some of them are longer term based on the model. But you can see all of my positions, orders. You can enter your phone number. You'll get a text message. You can see history of all the signals, live stream recordings, and again, AI analysis for your own stocks. Earnings power trade is where I trade option strategies for earnings, right? So this week, obviously, NVIDIA is a highlight. Obviously, AI is here to stay. We're building nuclear reactors to support, and NVIDIA is the main beneficiary. Obviously, it went through a period of consolidation, but if they have strong earnings, if they do have strong earnings, I think it could get back to all-time high. So I'm turning bullish and, have a well-defined risk, especially on call spread. I'm only risking 38 cents, but if it does get to 150, 155 level, this is where this spread could be 80 cents, it could be $1.20, or if it expires worthless, then unlimited gain, right? If the May 30th expires worthless, but we have continuation of the rally next week, then then there is no limit on the upside, right? So you can participate in some of these more expensive stocks for limited losses, right? 38 cents is the most you can lose, but if you do have that one standard deviation move on positive earnings, this is where you can have the 100%, 200%, 300% type of returns on trades. So periodically I do them. TJX last week didn't work out, but Cisco worked out well, and we have a few more trades that worked really well. Questions? So that's earnings power trader and profit accelerator stock trades only. So you can see, same thing, Abbott, CrowdStrike, IBM. And then Keith and I are also managing paid program, but this is kind of very active, very aggressive, requires a lot of capital. So usually I don't cover it on these calls. Any questions? So my NVIDIA trade, sure, I can repeat that. So NVIDIA trades, I basically did two. I sold the put spread. I sold 120, 117 put spread, basically to finance the call spread, right? If you don't want to spend 38 cents, in theory, unless NVIDIA breaks below 120, right? If NVIDIA breaks below 120, then I have $3 risk, right? So if it breaks below 120, if it takes out the last 3 weeks lows, so there's kind of a neckline at 115. But if it takes it out, let's say it drops to 115, right, 10% drop or more, right, 10, 15% drop, then this would be a losing trade, right? $3 worth of risk. If not, then I'm using the 23 cents, right? I sold, right? I sold 120 put, bought 117 put in case I'm wrong. And with the idea that we will revisit the highs between now and June 6th. after NVIDIA earnings. So calendar spread. We could do 150 because the largest position in NVIDIA is actually 150. I mean, you have some 160, but 150 is probably one of the bigger strikes positioning. So more likely than not, and it's been moving, I mean, on the good news, 10% up, 10% down. So if it moves 10%, that would be 150. I guess I don't want to get a sign. I want to keep the proceeds from 155 call and then and hopefully, you know, like CrowdStrike, it's going to break out and continue to go higher, because you can see some of these, you know, Tesla, CrowdStrike, they are breaking out. They're continuing to move higher. So, you know, so I think Snow from last week, some of the calendar spread, Snowflake did well, continues to go higher. Shopify, right, from 2 weeks ago, continues to grind higher. So, you know, Intuit, wow, Intuit closed it a little earlier. Intuit is up 3.5%. AMD after the earnings up 4%. So you can see a strong momentum to the upside. Right. Why do you see a downward movement in Microsoft? Well, that's a model, right? That's not me personal. I assume we talked about this, right? Yeah. So Microsoft sees, so the model, keep in mind the long term is basically driven by the, let's see what this thing says. So this is my earnings, yellow tunnel model. Let's see, this is more of a technical, more of a traditional technical analysis. It's actually all positive. Microsoft, it's short term, medium term, long term, all turning positive. The model ran on the 1st of May, right? Right before this earnings, right? Before this big pop, right? So here it wasn't downtrend, right? So that's the reason, one of the main reasons, because Microsoft was underperforming up until May 1st, right? The longer term models run on the 1st of each month. And, you know, April was one of the worst months in recent history, and May is one of the best stock in recent history, right? So it will adjust after, you know, in 4 days when the model, when we have complete data set, it will run again. So short term, it's actually negative, and long term, yeah, it's negative. All right, so Microsoft is negative because it was trading in downtrend, and then after the earnings, right, end of April, after the earnings, it consolidated and now have a strong rally. So, I mean, a lot of people ask me, well, then why don't you rerun model every day? The reason I don't rerun it every day, because these are predictions based on 1 month. So long term, I still think Microsoft, you know, well, was trading in downtrend. Now it's obviously, I would say, neutral. It's not making new highs. It's not breaking out. It's probably overbought. You know, for 3 weeks, it hasn't really made new lows, new highs. So it's a little bit overdone, but that doesn't mean you cannot get to all-time highs, which is 460, or even make marginal new highs. But Tim, hopefully that explains why. Kevin, yes. Yes. Our market can stay rational longer than you can stay solvent. Warren Buffett, I think, it's a famous phrase from Warren Buffett. Yeah. But meanwhile, I'm watching, you know, SPX. I like SMR. Wow, it's a good looking chart. And then SPX, right? We're kind of getting close to all-time, not all-time, recent highs, 59, 50, 50. I think in futures, we were already at 6,000, right? Futures would touch the 6,000. Okay. So that's your next level, right? We're 1% away from 6,000. I would watch that level. All right, guys, you were great. Bond collapsing. Yes, yield is going higher, Kevin. Thank you. Yields are going higher. It's not just in the United States, everywhere. with the idea that inflation is going to be stickier for longer. I mean, today it's obviously down, but we have, you know, since the end of March lows or September, right, big rebound. For now, no signals, so for now we'll watch. All right, that's all I have for today. Thank you very much. You guys have been awesome. Next Tuesday, same time. I apologize. Some of you were at 12 o'clock last Tuesday. I came in very late, was kind of lost track of time, so I apologize. But, you know, we'll try to, next Tuesday we'll be on time. All right, any questions? All right, that's all I have for today. Thank you very much and have a great day.